Welcome, students, to GK's Education. This is my third video on the chapter Not for Profit Organizations. As we did earlier, these are the organizations which work not for earning profit but for providing the service to society. We did that these organizations maintain receipt and payment account, income and expenditure account, and balance sheet. We did all these three accounts with complete basic pro forma in the previous two videos. Here we are looking for some important adjustments which we should keep in mind while solving the problems. The first one is donations. Donations means the amount which we get from the people to run our organizations. They give it selfless way, means they just give it as a charity so that we can continue our operations well. Donations are of few types. If they are of recurring nature, like they are being received by us every year, so they are called revenue receipts. In that case, they will be just entered in income and expenditure account on the credit side as our income. But if the donation is specific donation, like donation for building, donation for making auditorium, so that type of donations will be treated as capital receipts and they will appear on the liability side of balance sheet as donations for building or or any other purpose mentioned. If the donation is general donation, it will again be treated as a revenue receipt and will be on the credit side of income and expenditure account. Okay, so the second thing is legacies. Legacies means legacies means the amount which we receive from people as a part of their will. That means sometimes some people donate a part of their property or amount as or they write it in a will to be donated to our organization. So these type of payments usually appear on the receipt and payment sides. Okay, so what we will do is we legacies if we are receiving, so the usually the amounts of legacies are uh, usually the amount of legacies, if they are big amounts, so they shall be treated as capital receipts on the receipt side of receipt and payment, and then directly they will be added to the capital fund if they are big amount. If the legacies are of small amount, so by giving a note or by mentioning at a note that we are treating it as a revenue receipt, we can enter it on the income and expenditure account on the credit side. So the amount if small will be revenue, and the amounts if big they will be on the receipt side of the receipt and payment account and directly will be added to the capital fund. The third amount is the third adjustment we can say is life membership fees. Life membership fees means the amount which we receive from our members once. So that amount is you can say it is not of recurring nature. Like once when we are having a club, people become member of our club, so they have to if they are paying the lump sum amount for becoming our member, which is usually a big amount, that should be treated as a capital receipt. That means on the debit side of receipt and payment account it will appear, and then in the balance sheet the treatment will be capital fund or general fund, whatever it is, plus the life membership fee. We will add it in the fund while mentioning it separately. Okay, and then the next adjustment comes out to be entrance fees. Entrance fees is again, it is paid only once when one becomes a member of our institutions. Like some institutions like clubs, charitable institutions, it is quite high. Means when there is a big you can say renowned club or renowned institution, so we become a member. For becoming a member we have to pay the premium, the entrance fees. It is treated as a capital receipt. So what is its treatment? Basically on the receipt and payment sides, it is a receipt or income on the debit side, and then again on capital fund it is directly added as mentioning as entrance fee. Like we are having life membership fees, that will be added to the capital fund, and entrance fees which is capitalized, that will be added to the capital fund. But for some institutions like the educational institutions, it is of recurring nature. Like they organize some functions and charge the entrance fees. So every year they organize same type of functions, every year they receive the entrance fees in small amounts, so there it is treated as a revenue receipt. So in that case it will be just credited to the income and expenditure account for the particular year. The fifth type of adjustment is payment of honorarium. What is honorarium? It is the amount except the salaries. Means it is not a salary, but it is the amount, respectful amount which we paid to our particular guests who perform at the functions of our institutions. Like if a particular Ghazal Gaik is coming to our institution for a charitable show, so whenever he'll present his show, we'll give him some respectable amount. That amount is honorarium amount. Okay, so that amount paid to him is honorarium. So usually the charitable institutions, they every year organize functions and every year pay honorariums. So it is a revenue kind of it is a you can say revenue expenditure. Every year it is a recurring expenditure, so we treat it on the debit side of income and expenditure account. And then the next adjustment comes out to be government grants. These grants are the helps, you can say the amount which people pay to which the government provide our institution for particular purposes or for some general purposes. If the amounts are recurring, that means every year we get that particular grant, so it will be treated as a revenue receipt. Revenue receipt means income and expenditure account, it will be a credit side of that particular year. But if the specific grant is there, so that will be a capital receipt. It will be on the receipt side of receipt and payment account. And then specific that fund, that particular, like if the grant is for building, government is providing us the grant for building, so that building fund plus the grant received during that year minus the expenses done from that grant, and the balance will appear on the liability side of balance sheet. Then the last thing comes out to be special funds. Sometimes the institutions, they maintain a special fund, maybe a prize fund, maybe a sports fund, maybe a match fund. So in these cases, they the fund related, the fund amount which they create, they don't keep it idle, they invest it in securities and get the interest out of it. So there the double side effect on the balance sheet appears. How? Like the fund, it is on the liability side of balance sheet, that is on the liability side of balance sheet. So the fund plus the income as interest which we receive from the fund plus addition to the fund during the year minus expenses from the fund, and then the balances appears on the liability side. But the you can say the investment which we made during the year, that will appear on our asset side. That will appear on the asset side as investment in securities. That is our asset. So that is a double sided effect of it. So these were the all adjustments that we usually make while doing the chapter profit sorry the accounts for not for profit organization. I hope I have cleared all the adjustments and nothing is left. Thank you.